you have something here AI is not going to kill.
That's right. AI is going to support copper, actually. And yeah, if a company is trading at 4% of its net asset value, and you think that some of the factors that have brought the value down are going to turn around in anything near, short, or long term, then it's really hard to beat that value equation. With that in mind, and we have one of the most capital efficient projects on the planet.
Welcome to Financially Free Podcast with your host, Nay Torres. One of the reasons Nay could retire when he was 25 years old is because he was coached by the best. And now through this podcast, so can you.
Perfect. Thank you very much for your time, Adam. I just want to honor you because most people wouldn't do this or just don't take the time to answer the questions on the internet. Because let's be sincere about this. Everybody can say anything on the web. Doesn't really matter. But I want to honor you and thank you for your time. A lot of people have made a lot of these questions, and finally we can put them to rest.
Okay, I think it's a good idea. I saw your post on X telling people that we're going to do this interview and asking for questions. I know you got a good assortment of questions, and we're very keen to answer those. Too often, a company like us will give the same presentation over and over, and often there's not a chance for people to ask important questions. And usually we try to incorporate into future presentations things that we know people want to hear. But nevertheless, I think your more direct approach is valuable. So I'm looking forward to the questions.
And I'm going to share my screen. Let me know if you see it. Yes. So this is the post. A couple of thousand people saw it, and we have a couple of questions. The first one is, let's see Evans. Evans took the time. Evan Blecker from Canada, he took the time to post a lot of these questions in this picture. So I don't know if you can see it.
I can see that. I'll address the first one. What makes us think that the new President Sheinbaum, is pro-business? Because she does seem to be following AMLO's lead. I think she's paid a lot of respect to AMLO's policies and to AMLO himself. She is president likely because of his endorsement of her. She's made a point. She made a point on the day of the election of coming out and expressing support for foreign investment, expressing support for those foreign companies that operate in Mexico. And she has subsequently appointed very pro-business and pro-foreign investment, pro-business as usual members of cabinet. That sent a very strong signal, and she's taken every opportunity to express those pro-business, pro-foreign investment views. She came out at one point and talked about the importance of mining to the Mexican economy, cited some figures, some very high figures in terms of the contribution to GDP of mining in Mexico. So she's making statements. She's not revisited any attempts to propose new legislation, and she seems to have accepted some recent Supreme Court decisions that are pro-mining and pro-foreign investment. And then just in this last week, she's come out and talked about the effect of the meetings that she's had with various mining lobbies and mining interests, and said she will revisit some of those policies, particularly the open pit mining ban. It does appear that she's subtly, not yet definitively, but subtly moving in the direction of being pro-mining and certainly recognizing its importance in the economy, maybe even increasing importance as there's some questions now hanging over Mexican manufacturing and its ability to export to its biggest market, biggest customer, the United States.
Yeah, thank you very much. And I would like to add something too. Most people forget in history, economics dictate politics.
Yes, that's right.
Other way around.
Yeah, that's right.
That's what I learned from history. Second question, can you lay out the steps that Oroco will have to go through before it can sell the property? What's your timeline for each?
Okay, so remember, a sale involves two parties, or it involves a buyer and a seller. A buyer being present is, of course, probably the most necessary step. I think Oroco is ready at any time should an acceptable bid come for the company. But how we're going to affect that, how we're going to attempt to catalyze it and bring us closer to the point where acquisitive interest is appropriate, is we'll move the project from where it is today in a PEA level, preliminary economic assessment study level, and move it up to a PFS. I think if we look historically at transactions that have taken place of development stage projects being bought by bigger companies, by and large, that step up to a PFS is a point at which I think more transactions have taken place with projects at PFS stage than otherwise. Very few transactions take place prior to that. I think the Filo acquisition by BHP was an exception because that is an exceptional once-in-a-generation property. But we're going to move it to PFS. We're going to do so between now and this time next year. And the other things that we'll do that essentially de-risk the project, make it more interesting to a buyer, is we'll continue engagement with the community. I think we've got an exceptional relationship with the local community. We've got a degree of acceptance by the local community and desire on their part to see a mine develop at Santa Tomas that is second to none. So we'll continue that process, and we'll start or continue to talk to those levels of government that would ultimately help permit this project. I think we've been very successful so far in getting from various levels of government towards this project, and we'll continue that. So we'll bring the project up to a technical level at which acquisitions seem to take place more often than not. That's PFS. And we'll de-risk it from a permitting perspective and a community acceptance perspective, and expect to see quite a busy 2025 on all of those fronts.
Perfect. So the third question comes along with those lines again, market timing maybe, because I realize you can only control your side of the team, right?
Yep.
The buyer will come when the buyer comes. But the third question is, realistically, when is a sale possible? When will the major start to make an offer?
This podcast references opinions and is for information purposes only, not intended to be investment advice. Seek a duly licensed professional for investment advice.
Oh, as I say, at any time, and I think there's been a lot of discussion in the industry about when majors are going to do that. A lot of them have spent the last decade improving their balance sheets, getting them in a position where they are flexible, more flexible than previously to make acquisitions and deploy capital. They've had some periods where the share prices have been relatively high, and if they're going to use their shares as capital to acquire projects, then I think that's another condition. Obviously, if a company doesn't have much cash and their share price is low, acquisitions don't appear very attractive. I think the expression animal spirits is used a lot in the market, and I think what a lot of people are waiting for is that point at which the ability to acquire, to make acquisitions either through cash on the balance sheet or share price, and the desire on the part of the boards of directors and shareholders of these big companies to see them deploy that cash or deploy those shares is such that the management of the company understands that they're better off making acquisitions than they are holding back. The point at which they want to shoot the puck is the point at which we'll start to see acquisitions. And the groundwork for that, forecasts of rising metal prices, in particular rising copper prices, future deficits, the fact that it takes 6 or 8 years to go from where a project might be at Santa Tomas stage to being in production, and it's widely understood that in 6 to 8 years we're going to have large gaping deficits. Elevated demand, limited supply, we should be seeing higher copper prices. And so the time, I think it's well understood in the mining industry that the time to make acquisitions and start building mines like Santa Tomas is now, or we're even past due on that. So we need to see, I guess, the first couple of companies make acquisitions. But once they do that, it's a game of musical chairs. It's well understood in the industry that there's more buyers and more projects needed than there are development stage projects independently owned like Santa Tomas. It's really interesting going to these big mining conventions and speaking to the majors and speaking to the mid-tiers and speaking to the private equity guys. Everybody knows that the time is right for these companies to make acquisitions. And they're still juggling a decade of cost, conservative behavior with their capital, but the understanding that they need to make acquisitions. And we've seen the heads of some major companies be very clear that they need to make acquisitions of projects. And our experience has been that we've seen companies not traditionally in the copper mining space, but in mining other metals, come forward, express an interest in exposure to copper and an interest in copper assets. And we see all the conditions there. We just don't yet see acquisitions take place, but there's certainly pressure building up behind the dam.
And I'm sure you'll show us later in the presentation that Oroco is one of the best return over investments right now.
As a matter of fact, I will. There's reasons why Santa Tomas stands out among the pack as being less risky, a better investment than a significant number of other projects, and a very attractive project with a clear line of sight to development.
Perfect. He also asked, why did you go to shareholders with rights offers instead of looking for private placements? This seems to be a more fair way to treat your existing shareholders.
Yeah, I can't. That is in theory, yeah, that's a good idea. I think, though, we get just as often the question from shareholders about an institutional investor or a strategic investor that would credibilize the project, a big, credible mining entity, whether it's private equity or a major who comes in and takes a percentage of the company. If I have to weigh shareholder interest in another private placement against what I perceive as shareholder interest in seeing a strategic or a credibilizing investment from a major entity. I would say the time is right now for Oroco to get that strategic investor, whether it's private equity, mid-tier major mining company, or some other big entity. So I do respect and appreciate the shareholder interest in funding the company. We've raised $75 million to date, I think mostly out of the interest from our existing shareholder base. Huge respect for that. I think that's an extraordinary accomplishment for a junior mining company and represents an extraordinary bunch of shareholders we have. But I think the time for going forward is right for us to bring in a strategic.
Okay. Number 5, where are we with the Brazilia zone? Is there still hope for a large high-grade deposit?
We believe between the north and the south zone, with the 1.1 billion tons of resource there, the additional resource potential that exists in those two places, as well as some optionality, like the 250 million tons in our mineral resource estimate that's not included in the current mine plan, as well as the plus 500 million tons that exist north of us at the Barachi property, that there's plenty of size here. There's no shortage of mine life or resources to mine to lend to the NPV and determine the internal rate of return. And one of the important aspects, I think, of a project's saleability and interest on the part of potential acquisitors is that there be exploration potential. So we feel that this phase 2 drill program that's upcoming, where we're going to drill the saddle between the north and south, we're going to drill the south zone to increase the resource level from inferred to measured or indicated, as well as the southeast and southwest zone, where we've got strong geophysical anomalies and mineralization remains open. We think between those zones, those goals, and those additional zones to drill, there's plenty of potential to increase the size of the resource. There's also, you'll note, the drill holes at the north end of the north zone, and then the relatively large gap between the drill holes in Brazilias. There's a lot of potential there as well. We angle the hole out to the north from the north zone and into a big void where mineralization remains open and geophysical anomalies are present. Yeah, we want to balance an efficiency of drilling in order to get to a PFS, which requires lifting the inferred, with the potential to expand the resource, still leave some exploration potential on the tables. Brazilia has all the potential that it ever did, and then the several kilometers from Brazilia to the north end of our boundary. We'll weigh what we think is going to contribute to NPV and IR, and a more complete picture of how to mine the north and south. We'll weigh that against that plus drilling anything potentially to the north of the north zone. So yeah, Brazilia's, the area between the north zone and Brazilia's, and then north of Brazilia's to the boundary, still contains lots of potential, and I think it's going to be drilled one day. I don't know if it's essential for us to drill it to get to the desired goal here, which is either a sale or developing and giving the shareholders an exit in some fashion.
All right. Thank you. And the last one from Evan is, how much more cash do you anticipate having to raise before the property is sold?
Well, again, I guess that relates to the timing and when majors start to step up and when such a sale could take place. But I think the phase 2 program that we're going to undertake, maybe about a $20 million expenditure, the bulk of which is drilling. So once we finish that, I think our burn rate is going to decline quite a bit, and that'll mitigate the need for additional cash. So I think fair to say we've raised the majority, even the vast majority of the money we need to raise. Phase 2 will be a significantly less expensive program, and we're thinking in the range of 20 million. So 20 million plus whatever may be necessary to sustain the company after that, but at a much lower burn rate, because we're doing a lot less drilling, and that's the expensive thing in projects like this.
Perfect. Let me choose another one from the list. We just talked about the game plan. Okay, so there's a couple of questions. For example, somebody mentions that marketing-wise, you mentioned not to be promotional. However, you do pay for in cruise.
Sorry, I think you just got a little fuzzy there, but I think I can understand what the question is. Oroco is not promotional, and by promotional, emphasizing the positive without being objective and without talking about both sides of the picture. So no, we're not promotional. We try not to wave our arms. This is a really great project, and it's really hard to not sing its praises. It's a project where I think there's relatively few flaws. There's certainly no identified flaws of the type that might restrict development of the project. We can paint a very positive picture of Santa Tomás without being promotional. At the same time, I guess not just the content or the nature of our content and our tone, is how much we emphasize investor relations, how many channels we're on, how much we pay to be in the public's eye. And yeah, we've been parsimonious, I'd say. As a company, we don't have a big IR spend. I think one of the goals going forward as we get to the completion of phase 2 is to design an investor outreach program that is a little more aggressive than it's been in the past. By the time we reached the conclusion of the second PEA, I think we'd accomplished what we wanted to, which was funding the company to do that. And we'd done that actually fairly cost effectively in terms of the cost of capital of the company and the cost of investor outreach. The message that we want to get out next year is that this is one of the top undeveloped porphyry copper deposits, large-scale porphyry copper deposits in the hands of a independently owned asset. And I think that's a very important message to get out. So now that we have hard data, we have valuation that we can identify quite clearly, I think it really is important for us to get out and start expanding without being promotional, but having an expanded investor communication program. The message contained on this slide, for instance, that our new PA established NMS as one of the most capital efficient, large scale, low cost copper projects in the world. That's a really important message, particularly as we go forward into forecast copper deficits. And we know, and we're getting messages from a great many parties, that they want additional copper projects to put in production, and the world knows we need these to put in production. So now that we've got hard data, numbers you can put your fingers on, and we've got a story really to tell, I think it's important for us to get out there and not to be promotional, but to communicate the qualities of this project, of which it has many identifiable qualities.
Another question related to costs. A couple of people mentioned maybe other channels like CEO.ca. Here's a specific question is about the trips. They're saying or complaining traveling are there's traveling involved, and that's a cost.
Okay, the world of mining investment and certainly investment in junior mining is a fairly small one. The number of institutions, the number of individuals, researchers, brokers, etc., involved in the junior mining business, it's not large. And you have to get yourself in front of that community. And one of the ways that we found to be most cost effective and most effective is to physically get in front of people. There's a number of mining conferences annually where you can have, as we have recently, you can have between 30 and 50 meetings over the course of a few days with parties that you'd otherwise spend months, even years trying to get in front of. So attendance at those events and the number of people you can get in front of, whether it's private equity, brokers, analysts, majors and mid-tier mining companies, family offices, high net worth individuals. You can see a lot of those in a very short period of time, very cost effectively at these conferences, and they need to be updated. Often one visit is not enough, particularly with a dynamic situation like an ongoing exploration program and multiple PEAs. And I think one of the ways in which we measure the cost effectiveness of these things is not simply how many meetings we have, but how much money those meetings has allowed us to raise over time. And if we go back over the last decade or certainly 7 or 8 years in Oroco, and we look at how much money we've raised, which is now closing in on $80 million Canadian during that period, and we look at the cost of capital, I think we're among the lowest cost of capital junior mining companies out there. First of all, we've raised more than the vast majority of our peers, and we've paid fees related to those raises that are a fraction of what would have been had we had third parties raising that money for us and paying standard finder's fees. So we've had a cost of capital in the 1.5 to 2.5 to 3% range versus standard finder's fees on broker placements, for instance, of 6 to 8%, plus legal fees, plus additional fees on top of that. So I think those trips, in the context of how much money they've allowed us to raise and the profile that the company has now, the number of majors in our data room, the number of majors and mid-tier mining companies that are aware of and watching this asset, watching this company, I think we've been very cost effective in those. Has the market fluctuated during that period? Absolutely. And I don't think the existence of any investor outreach program, whether it's one-to-one meetings or presentations to large groups or online virtual meetings that you can stay in the office and do and not travel, I don't think any amount of that is going to cause a share price to rise constantly and consistently without setbacks based on other things that are happening in the world.
Excellent. I think that summarizes all the questions that people made. Thank you very much. And now you can tell us a little bit, why is Oroco?
Okay. Thanks for those questions. I know there's a couple questions additional questions that we get quite frequently. the specific location of Santo Tomas with the river to the north and dividing the north zone from Brazilia. There's 3.5 kilometers of distance of mineralization in our mineral resource estimate between the river in the north and the south end of the south zone, and we'll drill additional strike length. And the mine plan doesn't touch on the river. It respects the Mexican Water Authority's boundaries, CONAGUA's boundaries between any water body and a mining activity. And there's a healthy sized berm between the river and the project. So the river doesn't really affect mining. It means there's a couple 100 million tons of resource that's not in the mine plan, but it doesn't. The seasonal river that's relatively shallow and dry approximately half the year doesn't affect the activities. I know when you look at a picture of it and you see the river winding through the middle, you wonder how you can mine under that. And the answer is we're not mining under that. There's 860 million tons of resource that's accessible without going near the river. And there's 250 million tons that are not included in the mine plan that a future operator always has the option to expand on that and incorporate it into the mine plan by doing what is a fairly simple bit of engineering, and that is culvert and divert the river. And that happens very frequently in the mining world. The other question we get about our location is we're within Sinaloa. In fact, the property straddles the border of Sinaloa and Chihuahua. Chihuahua is one of Mexico's biggest mining states. Sinaloa is growing, but Sinaloa is also associated with certain social disruptions, criminal cartels and whatnot. Where we are, the northern extreme of the state of Sinaloa, is a region called La Entrada El Pacifico. It's a multimodal trade and transport route designated under an act of U.S. Congress and recognized by the state of Texas and Mexico. It's a very important trade and transportation route from the southern U.S. to the Pacific Ocean. Within that La Entrada, there's currently about $11 billion of capital projects either underway or proposed. Santo Tomas would make it $12 billion. So it's a region of heavy industry, a lot of foreign investments, a lot of the necessary infrastructure to put a project like this into production. And if you look at those parts of Sinaloa that are affected by the criminal cartels, that is entirely to the south of us. We map those incidents of violence and cartel activity, and it's entirely in the central part of the state south of us. So I think there's Sinaloa, and then there's La Entrada El Pacifico, and I think we're more accurately should be described as being present within La Entrada El Pacifico rather than Sinaloa in a general sense. Local community, I think that we get a question about that all the time. This is a mining region. We're in a region that people come to seek jobs. There's a number of mining operations, formerly producing mines and currently producing mines in the region. We had a talk at a recent mining conference with a major who have a 2-decade history in Mexico, including mining within sight of some of our facilities. And they talk about how terrific and accepting the local population is of mining activities. I think that covers some of the topics that we frequently get asked about. But back to the project, one of the most capital efficient big projects on the planet. I think that's particularly important at a time when the majors have shown caution about capital expenditures and new capital expenditures. If you want to be noticed and interesting to the majors, try to follow the puck. And right now, that is telling you that the majors don't want big capex projects. They're shy of those projects. And so we conducted the PEA, the second PEA, with that in mind, and we have one of the most capital efficient projects on the planet. And I'll switch slides here. To be repetitious here, the PEA showed us the 1.48 billion post-tax NPV.
Just to make this clear, if we are going to dumb this down, what is a PEA? It's an engineering study.
Okay, that's fair. Preliminary economic assessment is a study. It's a fairly thorough study that talks about a project's capital cost to build, operating costs, so CapEx and OpEx, as well as revenue. So it gives you a detailed, in our case, almost 400 pages of detail in that report that talks about what it would take to build the project, what it costs, what the operations will look like, what the earnings at a particular price of copper will look like, and there's a table in there that shows different prices all the way from $3 to $3.50, $4, $4.50 copper, and $5 copper in our case. So it gives you a very, very good snapshot of what
it's extensive business plan with financials included. It's not just engineering.
Correct. The next level up from a preliminary economic assessment, one that I referred to earlier as I think the necessary step before you start getting interest from potential acquirers or developers, is a pre-feasibility study. In our case, I think our PEA was very carefully done. I think a lot of the figures in it were studied very to the point where if you wanted to include them in a pre-feasibility study, you could. However, a pre-feasibility study requires a different level of engineering confidence in the resource. We included an inferred resource in our PEA, which is allowed, but to get to a PFS, you need measure in order indicated. So you simply need to drill in higher definition and meet the standards of those two categories, measured or indicated. So that's the direction we're going, towards a PFS. And I think the expectation is we'll see some incremental changes, some incremental improvements as a consequence of the drilling, filling in the gap between the two north and south zone, and any potential additional resources in the southeast and southwest will improve the figures, the net present value, which is just the value of future cash flows over the life of mine, discounted at a rate of 8% per year. That's the NPV 8. And then the internal rate of return is just what percentage return is earned on the capital.
And I'm sorry, I'm going to make some probably dumb questions. Why 8%?
8% is you want to, some people say in this environment with higher interest rates, maybe that percentage should be higher. Other people say it should be lower, but really I don't think it's too high or too low. It's probably close to a Goldilocks number where interest rates are now. But the other thing that it does is it allows projects to be compared, different projects to be compared. You put side by side half a dozen of these projects, and you want to see constant figures for the purpose of comparison. So 8% discount rate is a widely used number, and you can therefore compare Santo Tomas with 6 or 8 or 10 other projects of this type, because that figure 8% is what is most widely used.
Okay, thank you.
And I think the figure that I like even more, or just as much as the 1.5 billion post-tax NPV, is the post-tax IRR of 22%. And that's important because, or 22.2%. That's important because an investor looking at this project, of course, they look at the size of the project and they look at how many pounds of copper they're going to produce over the lifetime and what potential is to grow it. But they also want to know what their return on their investment is going to be. And the IRR of 22.2% compares very favorably to our peer group. And it also exceeds what is understood to be the hurdle rate of return by big mining companies on projects like this. And that is an unleveraged rate of return. So that assumes that you're paying for the CapEx. The CapEx is all cash.
Perfect. Thank you. That answers my question.
Life of mine, 22.6 years. That could change with the upcoming drill program. 108,000 tons per year of production, which is a very respectable figure. Today's copper price, that's closing in on $1 billion of revenue per year. There are bigger copper projects. There are projects that will produce 200, even 300,000 tons of copper per year, but there aren't many of them out there remaining undeveloped. So this is a big project that should attract a pretty wide swath of the mining community, from mid-tiers to majors, and relatively low costs. $1.54 at $4 copper. In the first 5 years, it's $1.34 per pound, which compares to copper today at $4.15 or so a pound. So you can see the gross margins here are well over 50%. Some secondary points, some points that actually are the reason for the strong numbers up above. We're putting 0.51% copper equivalent grade through the mill for the first seven years of the mine life. That is a relatively high grade compared to the cost at Santo Tomas. And we have a life of mine strip ratio of 1.38 tons of waste for every ton of ore. And that again is on the relatively low end of the range. And that also stands to be improved through the second drill program. And you can't build a mine unless you've got local community support. And building a mine becomes difficult if you lack available infrastructure. In our case, we have very supportive local community. We have outstanding local infrastructure that will, and certainly does, and we saw that in the PA, lead to CapEx and OpEx advantages. The mineralization at Santo Tomas is a very consistent grade, north to south, and 98% of the copper, a minimum of 98% of the copper, is contained in the mineral chalcopyrite, which simplifies metallurgical recoveries. We've got strong 84% recoveries in the initial tests, and the product that this mine would produce is a concentrate of 26.6% copper with some gold, and then a separate concentrate containing molybdenum. As I mentioned before, there's 250 million tons of what I call optionality here, subject to a plan to mine that. You've got an additional 250 million tons, which is several years of additional mine life, as well as what you can develop in the upcoming drill program. So plenty of potential to expand, and plenty of additional resources should the circumstances arise. Not to mention 500 million tons approximately of resource 14 kilometers north at a deposit owned by a Chinese entity that makes would make for a very attractive addition to Santa Tomas. And the baseline value established by the current mineral resource estimate in PEA, the market cap represents less than 5% of the net asset value of Santa Tomas, less than 1 cent per pound of copper of the resource, versus acquisition costs or acquisition prices, recent history and going back 30 years of multiples of that. RBC Capital recently published copper research. Reach out and ask if you want a copy of it. And they pegged M&A of development stage projects as taking place at an average of 0.8 NAV. So from less than 5% to 80% of NAV, I think there's plenty of lift here, even when you factor in the additional money that we need to spend to take this to the finish line.
So can you rephrase that? Because I think that's really important. If you were explaining to a 14-year-old, probably you would say, look, could sell for up to 80% of the value, but right now it's trading at 5% of the value.
Yes, the math is quite compelling.
That's if there's trips to Australia or whatever you want, well, you're looking at the asset, quite frankly. And
Exactly. Yeah, the bottom line here is we've got an asset with a $1.5 billion US valuation through an economic assessment. That study is going to go to a higher level within a year, a level which has traditionally started to catalyze acquisitor interest. And we're trading at 5% versus 80%.
Exactly. And another point is, I think people ask these questions thinking that they're going to time the market. And in my experience and decades of studying this, that never happens. In 1 day or 2 days, you can recoup 6 months of losses.
Absolutely. And we've seen that before. Our share price doubled earlier this year when attention started to be focused on copper and copper equities. And there's every reason to believe, and there's lots of potential catalysts coming up, whether it's financing, commencing drilling, seeing the first drill results out, some positive signals from the Mexican federal government that it's back to, they're back to normal and back to business. So I think there's more potential positive catalyst than anything else in Oroco's future. And yeah, if a company is trading at 4% of its net asset value, and you think that some of the factors that have brought the value down are going to turn around in anything near short or long term, then it's really hard to beat that value equation. And I think that is a message that is true not just for Oroco, but a number of our peer companies as well.
For investing in general, maybe it goes lower and people will just buy more.
Yep.
And patience.
And on the subject of picking a horse in situations like that, I think you look, in our case, in the case of mining projects, you look for projects in jurisdictions where they're traditionally supportive of mining, where the local community is supportive, where there's not a lot of impediments on the infrastructure side. Location is good vis-a-vis access to infrastructure, and it's a relatively easy project to develop. And then you look for projects that, say, are in the top half or the top quartile of once you use previous filters. And this slide shows that we are above average compared to our peers in terms of the internal rate of return, and we're above average in terms of what I call the profitability index, which is the NPV over initial capex. If you feel there's a value equation and you're picking a horse that is top of the pack, and you think the circumstances are right for the realization of that value, or the circumstances that brought the value down in the first place to reverse, that's really the story of Oroco right now. And regardless of the time frame, we all hope it happens more quickly. But over any reasonable time frame between now and when we think this is going to be recognized by an acquisitor, the compound annual rate of return potential in this case over any reasonable time frame is quite compelling.
Exactly. And I challenge anyone to tell me something more, because you have an asset here. We got an asset. Yep. You can take any other industry. You can guess the future growth of some other company. You have something here AI is not going to kill. That's
right. AI is going to support copper, actually.
Exactly.
And I can say from recent experience, attendance at these conferences that we go to, that this industry is being recognized. We are starting, and the fact that some companies within the industry represent real assets and hard value, that's starting to be recognized. The number of non-traditional investors in the mining space who approached us 2 weeks ago at the annual Mines and Money Conference in London was quite extraordinary. We saw there was a record attendance at the conference, which is always a good sign. And a number of the new participants at that conference were non-traditional mining investors looking for exposure to real assets and hard assets. And in the mining space, companies that have a defined resource and have advanced it through some level of economic assessment, that's a hard asset.
Yeah, and you keep mentioning this thing because I've been studying copper for, 5 years, 6 years. There was a mining in Ecuador that was the boom back in the day. I'm talking about 3 years ago. People don't realize those highways are going to be blocked because of the local people are not going to allow anything to be moved there. And if you have a community, you're not going to kill any special kind of bee or hummingbird or anything like that. It's pretty much a desert.
Yeah, and I think our location within La Entrada and the fact that there are mines within sight of Santo Tomas. To the east of us, there's a mine within sight. Then a little further east, there's the former El Sazal gold mine. And then to the west of us, there's iron ore skarns being mined. Tells you that this is a mining region.
Perfect.
So just a quick slide, La Entrada El Pacifico. I encourage people to go to our website, take a look at the deck that's currently posted there, and see just how interesting a region this is and how appropriate it is to be conceiving of big capital projects, big industrial projects like Santo Tomas. And this one, a lot of you have probably already seen this, but I think this speaks to a trend that investors should understand, and that is that as we've moved from the 1900s into the 20s and 2020 on towards today, 2024, the number of discoveries of copper assets has declined. And just as significantly, what discoveries there are starting to get deeper and deeper. So owners of big, low-cost, at-surface projects that don't require the expensive excavation of deeper projects will have an advantage. It is the marginal cost of producing copper that sets the price in the market. And as the cost of producing that last 10% of copper to meet demand starts to rise because of these more expensive projects, more expensive in terms of CapEx, more expensive in terms of OpEx. And that's what underground projects are. As that marginal cost rise, that last 10% cost rises, you're going to see strong support for higher prices of copper in the future, making projects like Santo Tomas, giving them an advantage. We would see at these low-cost surface projects higher margins as a result of higher copper prices, where the last 10 or 15% of copper may be produced close to break-even or not at great profit. Those low-cost projects like Santo Tomas will start to realize much higher margins and be much more valuable beasts. So the relatively small handful of those projects that are independently owned, that are undeveloped, will, in theory, start to become more valuable. So I think I've come to the end of my slide deck there.
Thank you very much, Adam. And I don't think I have any more questions. The thesis is clear. There's a huge discount on an asset. You guys are doing whatever is in your power to take it to the next level. You do not control the stock market or what it does. You could influence, but that will be probably a waste of time. And anyway, the market's going to do what the market's going to do. If a lot of people look at the mining industry, they all move the same way. And Oroco has nothing to do with the mining in Spain. However, they correlate a lot because the big guys move the stock price too. So you want to be when nobody's looking at the asset. That's what you want to buy the stock and just sit down and wait and have fun. I don't know. And thank you for your time. I think a lot of people just look at what the river may be an issue. And yeah, at a certain point, you guys can solve all these issues. Or it's nothing.
Yeah, I think we covered a fair bit of ground in this conversation about those things that on the surface, if you don't hear an explanation from the company, that may concern you. I encourage people to get in touch with the company. As you can see from this interview, I certainly like talking about the project, and I welcome inquiries from people who are interested, who recognize the value equation, but have a concern that they need resolved before they can make an investment. I really do welcome people to encourage people to get in touch and talk to us about those. And thanks for your help. I think we covered a lot of ground here.
Yeah, thank you very much for your time, Adam. I really appreciate it. Not many people do this.
Thanks, Nay. And let's make this a regular thing. As we get into phase 2 next year, there'll be lots of opportunities to update shareholders with ongoing activities.
I would love to do it like a monthly issue. Maybe we can do it live in X.
That'd be a great idea. Yep.
Thank you very much. Appreciate it.
Good. Thank you, Nay. Bye-bye.
Did you learn something today? How can you apply your insights? What's next for you? The fastest way to make things happen is to just share this podcast episode with more people that may find it valuable too. Talk about it with them and surround yourself with like-minded people. Hope you found this valuable. Don't forget to subscribe. See you next time.